But we begin this morning with the second biggest bank collapse in U.S. history. Federal regulators shockingly shuttered Silicon Valley Bank Friday. Following the bank's demise, the CEO acknowledged it has been an incredibly difficult 48 hours. The downward spiral began Wednesday after Silicon Valley Bank reported it sold a $21 billion bond portfolio at a $1.8 billion loss. The bank then announced it needed to raise more than $2.2 billion. That sparked a panic-induced bank run where customers withdrew more than $40 billion. The bank's stock plummeted more than 60% on Thursday before Friday's final fall. The shutdown also sent shockwaves through Wall Street. Each of the three major indices lost more than 1%. Michael George is here with the very latest. Michael, good morning.
Dana, good morning. The fall of Silicon Valley Bank leaves billions of tech startup dollars stuck in limbo. It's shaken up the global markets, and there are fears over whether this will affect other banks, too.
The sudden collapse of Silicon Valley Bank on Friday is the biggest bank failure since the 2008 financial crisis. But equity research analyst Alexander Yoakum says this is not the time to push the panic button.
Most banks, I do think, will be okay. I think banks that are very specialized, they definitely need to take this very seriously.
Also taking this seriously, U.S. Treasury Secretary Janet Yellen.
You mentioned Silicon Valley Bank. There are recent developments that concern a few banks that I'm monitoring very carefully. And when banks experience financial losses, it is and should be a matter of concern.
Banking regulators closed the bank Friday, and the Federal Deposit Insurance Corporation, or FDIC, took over, seeking to sell the bank's assets. Silicon Valley, a favorite bank of tech startups, has $175 billion in deposits, and 89% of them are uninsured as of the end of 2022. The FDIC only insures deposits up to $250,000. It's unclear what will happen to the assets of companies like video game maker Roblox and streaming company Roku, which have hundreds of millions saved there. Roku's stock took a 10% dip after the company revealed its assets are uninsured.
I think we got a little bit complacent over the last, decade plus. Interest rates were super low. Most things were working. You didn't really have to think about what would happen if interest rates went up really quickly.
Silicon Valley failed after depositors raced to withdraw money over concerns about the bank's health. The collapse has shades of the 2008 financial crisis, when the collapse of Lehman Brothers and Bear Stearns sent the economy into a tailspin, now known as the Great Recession. But experts say there are big differences between then and now.
Majority of banks will be okay. It's really specialized banks and banks that cater to the high net worth that have a little bit more concern. But at least so far, this is not 2008.
Now, the FDIC says anyone with insured deposits will be able to access them on Monday morning. The big worry for some of these tech startups, if they can't access their money, it could lead to workers not being paid or even laid off. Jeff?
Michael, thank you.